This one single mutual fund will replace the large cap, the mid cap, and even the small cap mutual funds in your portfolio, all while giving you better returns as well as great asset allocation. I know, it already sounds interesting, but wait till you hear on what this mutual fund's core concept is or the core philosophy is. It is built on the philosophy of trend is your friend. I know, an age-old concept in the stock market which says that trend is your friend, which means try to ride the trend, try to catch the stocks which are going to give you the maximum momentum so that you end up with the maximum returns. Okay? And while this momentum or this trend is your friend concept exists, always people ask, hey, I'm trying to ride the trend, but what if I get caught in bad quality stocks? Okay? And this mutual fund solves for that as well. So it solves for good momentum stocks, it solves for good quality stocks as well. And overall, it has given a returns or CAGR returns of 22% over the last many years. And for me, the most interesting fact is that it is a strategic index fund. Yes, we have discussed a lot about index funds as well as strategic funds in this channel. So I'll put it all in the I button. But if you don't know about it, it is a passively managed mutual fund which works on the concept of following an index. Okay, just like Nifty 50 has Nifty 50 index funds, there is an index which NSE has made which follows both these rules, which are trend, that is momentum, as well as quality, and tries to pick the great stocks in that category. So in this video, first we'll look into what the specific strategic index fund is, what the rules are, then we'll get into what the past returns have shown us, what is the benefits of diversification that you might get, and at the very end, we'll also discuss how you can start investing if you're interested into this mutual fund as well. So if that's the case, as always, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So let's learn what the specific strategy index fund is, which is Nifty 500 Multi-Cap Momentum Quality 50 Index. Okay. So what does it do? It serves as a replacement for a multi-cap mutual fund or even a flexi-cap mutual fund where it distributes its money not just into a single category, which is not just into large cap. It invests into large cap, mid cap and small cap stocks based on what? A combination of their momentum and quality factor scores. Okay, so first, what do we say? Trend is your friend. So how is momentum calculated? Momentum score for each company is determined based on its 6-month and 12-month price return adjusted for volatility. Okay, whichever stocks are moving up with a lot of momentum, that gets caught in this index's radar and it gets added to the watch list for that index. How is it confirmed if that watch list is going to be bought or implemented or added into this index? It also looks at the quality score for each company. How is that looked at? Based on return on equity, a lot of fundamental metrics, right? Return on equity, financial leverage, which is debt to equity ratio, then EPS, right? EPS growth rate. So all of this over the last 5 years for that company is looked at. Only then it is going to be added into this index. So based on both the momentum as well as the quality score, weightage is given to the stock up to a maximum of 5% in rebalancing. And when is it rebalanced? It is rebalanced semi-annually. That means every 6 months, new stocks could be added, older non-performing stocks could be removed from this index. So that is how the Nifty 500 Multi-Cap Momentum Quality 50 Index works. Now, I know the interesting part is not going to be just the theory of the index fund. It is going to be the performance for you, and that is not a bad thing, right? So let's come into the total return of this mutual fund over the last quarter, over the last 1 year, 5 years, and since inception. Okay, so since the beginning of this quarter, the mutual fund has gone up by 3%. Now, I know the theory of quality and momentum is not what excites you the most. It is going to be the returns itself. So let's look into the index returns. The total return is what we need to look into over the last 1 year, over the last 5 years, and since inception. So the last 1 year, it has not performed that well. Overall, if you're looking at the market also, multiple mutual funds as well as the mid cap and the small cap indices have not been performing well. But if you're looking at a 5-year CAGR, it has come up to more than 25.42%. And since inception, which is the calculation of this index, started in 2005. Since 2005, it has given us compounded average growth rate of 21%. And that is exactly what makes this index very, very interesting. So for perspective, let's quickly open the Nifty 50 fact sheet. Now, all of this is based on April 30th. Now you can see the better numbers coming out in May, now that the market has recovered. So Nifty 50 has given a total returns of 11.5% over the last many years since its inception. If you're looking over the average of the last 10 years, it's coming out to be 12 to 13% price returns of Nifty is coming up to. Now, if you go into midcap 150, you can see that it has given a returns of 17.5%, and we'll quickly go into small cap index as well. It has given a total return of 15.37%. Okay. So 15% for small cap, 17% for mid cap, and 11 to 12% for large cap. So let's try to calculate a very basic average. What will this come up to? Even if you follow 30, 30, 30, equal weightage in all of these, what will it come up to? Somewhere around 15%, or let's say even 17%, 18%, 19%. Even then, our index easily beats it over its inception period, and all while maintaining a better standard deviation, a better beta number than all of our mutual funds. And what is happening here? It is good two rules, which is one is technical, which is based on momentum, and the other is based on fundamentals, which is based on a lot of fundamental metrics, right? And that is what makes it interesting for me. So just wrapping up the part about rules and returns, you can see that this index started with a base price in April 1st, 2005. All the stocks that are part of Nifty 500 are eligible to be added into this index. Then 10 companies from Nifty 100 will be selected, 15 companies from mid-cap world will be selected, and 25 companies from the small cap universe will be selected. And everything is very clearly laid out here. When it will be rebalanced, how it will be rebalanced, everything is clearly noted down here. So I'll add all of these documents in the description. If you're interested, you can go check it out and read more about how this index works. So you can see after applying all of these rules, which are the stocks which have come out: Dixon Technologies, HAL, Hindustan Aeronautics Limited, BEL, Bharat Electronics Limited. Why are they trending now? And why are they performing well now? We know the reason. Defense stocks have been performing really well over the last 2 months. Bajaj Auto is in the list. HCL Technologies is in the list. So you can see all of the stocks which are going to be in this index very, very transparently on the NSE website itself. So after teaching you all of this, the natural next question should be, how can I start investing if I am interested? That is, this is not at all financial advice. Based on your portfolio, where you are in your life, what are your goals? You might even not consider this index fund. Okay, so make sure you understand what you're investing into, because again, it has good large cap inclusion in it, but it has mid cap as well as small cap inclusion also, which have historically turned out to have larger drawdowns than the large cap mutual funds. So you should understand that even though the numbers show a good indication, if you're looking at the performance of the index over the long term, it will definitely have an impact due to the mid cap and small cap volatility, which are part of the index. So make sure you're very, very careful. Now again, the next question should be, how can you start investing? And there is one single mutual fund for this index here. So again, you can directly invest into Nifty. You can invest into an index fund which tracks Nifty. And that is exactly the case here also. There is an Edelweiss Nifty 500 Multi-Cap Momentum Quality 50 Index Fund. As you can see, the expense ratio is very low, 0.37%. The exit load is only for 30 days, and that is for 0.1% only. It is a fairly new mutual fund, right? So you can see that it has been launched only in November of 2024, but you don't have to worry about that because it is based on a back-tested index which is released by NSE. This mutual fund is only going to track it very, very passively. So hope you understood the concept of this index as well as this mutual fund really, really well. I really hope that you understand what is the core value behind this mutual fund. It is not just to go for the highest growth stocks. Okay, that is a different philosophy. You might find few mid cap and few small cap mutual funds which even beat this index. But no, that's not the goal. The goal is, while having high growth stocks in your portfolio, always make sure they're having your good quality scores as well. That is a goal of this portfolio. So again, if you're interested, you can check out. I'll make sure I'll link everything down in the description. You can check it out. This is Ajay Ajith signing off. See you all again. Bye-bye.